All right, so welcome everyone to Disrupt's Fireside Chat with Plaid. Today, Ian Macallister from Plaid has graciously joined us. He is the head of North American Financial Institution Partnerships at Plaid. And previously, he worked at Trustly, US Open Banking, and he worked at Early Warning, head of sales, customer success, and strategic partnerships. Thank you for Ian for being here today.
Oh, thanks for having me, everyone. How many people we have out there? Let's see, you got about 12. That's good. Good deal.
Okay, so I guess we could jump right into the questions.
Yeah, let's do it.
So first, would you be able to speak about your career path and how you ended up in fintech?
Sure. I lived off ComApp for a while. Maybe that's where I started my career path. So for those that are on, I was talking to Isaac earlier. I'm from the Massachusetts area, so I started in Massachusetts. My undergrad is in architecture and mathematics, and so has really nothing to do, but has kind of everything I do have to do with kind of how I go about my work. But I underline that because it's just kind of like earlier on in my career, it was more probably about survival than it was really about figuring out the direct path. And it actually, what was important for me was there was a couple of kind of key things that happened throughout my career that at the time felt like really big change, but now reflecting back was very opportunistic. So I worked for a company based out of Cambridge that got acquired, and very early on they asked if I would take on an initiative in California, but I would have to up and move. And that was probably the best thing that ever happened, because what it did was it took me out of my traditional comfort zone of being around family and friends and actually embracing change. And that was kind of a consistent theme throughout my career. So earlier on in my career, the dot-com crash happened, which was in the early 2000s, which effectively I moved from Massachusetts to the Bay Area, and the Bay Area got crushed because of the dot-com. But that redirected me into a different trajectory into banking, because banking was much more stable than my current role. But then even within banking, I had 3 or 4 disruptive type of activities that happened. So 2004, like the real estate crash happened, but that actually moved me into a different direction within Wells Fargo, which I worked for 14 years. And so it moved me into more of an M&A and doing more traditional banking activities. But then even in 2008, when the economic crash happened, that bumped me into a different role, but still with the same path of like recreating and leaning on kind of what I had passion around, which was, thinking about how to be at the point of change within an industry. The last 7+ years, I've been doing a lot around fintech and digital payments. And that's really what Plaid is doing, is really thinking about banks and consumers and the rapid digitization of financial services. And so being able to lean on like being nimble when change happens and leaning into that change and actually feeling like you can actually be part of the change versus being scared of it actually has been something that has energized me throughout my career. And here at Plaid, we're doing even more of that. We're trying to help financial technology companies build more innovative products so consumers can actually think about financial services more broadly than just traditional banks. And so it's just been it's been, I'd like to say clairvoyance of thinking about like, how did I line myself up with different things that happened in the industry that created massive change, but at the same time, not being scared of it and actually leaning into those periods of change to actually influence how my career was growing. So I think the one thing I would say is I started with architecture. I still lean into like the creative nature of design and architecture, at the same time, the more structured elements of mathematics. And like, I think those are just some of the core building blocks that I had early on through my undergrad. And now I still lean into those throughout my career.
So this question is actually a little off script. You keep saying how you embrace change and that's kind of led you to success. And yeah, honestly, fintech is the idea of just embracing change and bringing technology to change how things are done. So do you think how those two connect? And is that, so would you say, yeah?
Yeah. I mean, I think part of the reason that Plaid brought me here was Plaid, if folks don't know who Plaid, I'll answer a couple of these questions throughout, so like we can skip around, which I'm totally happy to do. But Plaid has been in existence for almost a decade, really with the kind of the northern light of how to create financial freedom for all. And they did that earlier on in a way that disrupted banks, disrupted banking by allowing consumers the freedom to connect their data to third-party apps like Venmo, PayPal, Robinhood, but in a way that, because those apps were actually creating competition to banks. And I think that is like at the core of what FinTech is trying to do, which is trying to create more innovative products, which really stretch the boundaries of how consumers use financial services. And that's actually influenced how banks operate. And I think right after, almost 10 years of Plaid being in existence, they're thinking about how to work with not only over 5,000 FinTech apps, which are all of our clients, but also like over 12,000 banks and credit unions to help create that, again, alignment to broaden the ecosystem. And so it's been really interesting at Plaid because it's historically been a disruptor, thinking about real FinTechs, thinking about startups, but now we're building platforms where it can actually help banks think about more innovative financial services, like especially with COVID, rapid digitization. And so it's kind of a fun time to be at Plaid because it's not just like one-sided network, but they're thinking about kind of all constituents in the ecosystem and how to actually influence the growth of FinTechs, but also traditional stodgy banks, to be honest with you.
So it seems like you almost already answered my question, but I guess I'll ask it anyway. So on the company website, Plaid describes itself as making digital finance possible. It continues to explain how Plaid makes it easy for people to securely connect their financial accounts to the FinTech services they choose. The developer-friendly platform supports over 12,000 financial institutions, so the over 5,500 digital financial services built on Plaid can be accessible to everyone. So how would you describe what Plaid does and why are you excited to be part of the team?
Yeah, so Plaid's, one is I've known Plaid since early days and I've just seen the growth. I live in the Bay Area I should have probably started there. I'm in San Francisco now in the Plaid offices, and I knew Plaid was a juggernaut when if we get into my prior work, I worked at like a bank and a bank-owned company where the board of directors meetings, they would talk about Plaid. Plaid was a 100-person company in San Francisco, but yet this large bank-owned company, the board discussion, the strategy discussion was talking about entities like Plaid. And so you just knew something was happening, right? So like it was really interesting to see from the outside. And I saw Plaid grow. They've grown, like you said, they work with all size financial institutions in the US, and the United States has like over 12,000 credit unions and banks. The largest ones are Bank of America, Wells, and Chase, but it gets really small really quick. And over that same time, they've built relationships with all of these FinTech apps where you have small organizations, 5, 6 people firm or FinTechs that grow into Venmos, that grow into Robinhoods. And so Plaid is perfectly positioned to sit in the middle between these large financial institutions and these smaller development shops and allow the FinTechs to build innovative products, leveraging Plaid's platform. So consumers, when they use the app or the FinTech, they can connect their data through Plaid from their bank. And Plaid's been doing that for, like I said, almost 10 years. We've grown to over 1,000 people. And so it's incredible growth. The influence that Plaid has in the industry is growing too, not only at the board of directors of these bank-owned entities, but also how they think about data security, how they think about influencing new entrepreneurs and coaching them and mentoring them. So Plaid's playing a broader role in the ecosystem, not just playing this intermediary in between a bank and a FinTech app, but they're actually helping the industry build an open finance infrastructure that is broader than just technology. So that was kind of what drew me to Plaid, was seeing the evolution of just a pure technology play to being an influencer in the industry. And that's really like a sweet spot when you know you have an organization that has built enough clout within an industry that they can actually start influencing the strategy and the direction. One other exciting thing, you see Plaid. If anybody saw like the Super Bowl ad where Coinbase had the QR code bouncing around, that triggered over 500,000 people actually signing up for Coinbase through Plaid during the game, and we saw like over 3,000 connections per second. And those are the types of things that are just like really amazing when you're part of a company. You only see it behind the scenes, but it's reinforced when you actually see metrics like that. And that's like marketing dollars we didn't even spend. It was all Coinbase, but yet we get to see our technology tested and stretched, and it survived, which is great.
Yeah, I didn't know about that. That Super Bowl anecdote, that's awesome.
Yeah, it was fun to watch.
So in many instances, the best solutions are the simplest ones. One of Plaid's selling points for businesses is how easy it is to implement. It's specifically stated on the website, with just a few lines of code, you can implement Plaid in an afternoon. So do you believe that Plaid makes doing business simple? And how does this compare to the traditional financial industry?
Yeah, so what I would say is Plaid has been like the building blocks for these smaller fintechs, again, to think about how do you connect consumers to their bank, to the data that they own, because that's core to what Plaid is. It's the connected tissue between a consumer and their data, and that data sits at a bank. And so fintechs have traditionally used Plaid as ways to just get access to data such that they can sign up new consumers. And that's been really simple. It's a few lines of code. The consumer can then connect their bank account, and now the fintech has access to allow the consumer to actually just sign up. So like entering their name, address, and really historical financial data, such that you can build innovative products around like personal finance management apps. So you can manage resources, your financials better. You can do payment apps like Venmo, PayPal, and other products like lending, where we have a lot of lending clients where they do mortgage lending based on the data that consumers provide access to through Plaid. But the point there is, each of these, when you think about traditional banks, they have all of those products at once, and so therefore they have a lot of technology built out, because they've been thinking about how do we ensure we have a mortgage platform and a personal finance management platform and a credit card platform, and all these different things are all within the bank. So they have to build really complex solutions. When you have fintechs, all they need is a few lines of code so they can connect some data, and they can build a really amazing user experience for a specific use case. And that's how they get started. That's how fintechs get started. They see a problem, they see an less than ideal user experience. They see a consumer segment that's not getting access to certain financial services, and they build around that specific niche, opportunity. They don't need to build the full platform like a bank does, and so therefore, like, they can be very successful very quickly by partnering with an organization like Plaid.
So this can be a little off script as well. It sounds like you just said how fintechs can be successful by just picking a problem, figuring out a nice solution to it, and sticking with that. So do you believe that's the best way for someone if they wanted to start a fintech?
I think it's probably the best way when you have limited resources, high energy, to make a real impact very quickly. I think that totally makes sense. Because you're not trying to solve every world problem. You're trying to take like a blank sheet approach to how would you create a better user experience or a better product market fit with a consumer using financial technology, using an app. And the way to do that and to get people interested in that is create like an amazing experience. And then you start building experiences off of those. And I think that's probably the traditional way. And Plaid loves those ideas, because the person who thinks about, hey, I just want to make a person-to-person app and make that socially, make a social network around that too. I mean, you have Venmo. Now they got acquired by PayPal, but the point is that they're acting and performing more like a bank, because they took they solved a very specific item early on, and then they started layering on other opportunities. Now they have cards, now they have accounts, now they have, such and such. So they're starting to look like a bank, but it took them years. But getting traction was really that solving that, like what could really make this thing fly. And so I think that's a tried and tested approach for sure.
So also before you were talking about how much data, I guess Plaid and the other banks like collect. So Plaid recently announced Plaid Portal US, which is a privacy tool for consumers. Plaid Portal makes it easy for US consumers to control which apps have access to the data they've shared through Plaid's data connectivity and authorization management APIs. So in this day and age, how important is it for consumers to be able to control their own data?
So super important. I think it's like number one. Again, I think Plaid and many others keep consumers kind of in the center of the next, like it's like the nexus of the universe for us. And we believe that consumers own their data wherever it lives. If it lives at a bank, or if it lives at a fintech, or if it lives at a neobank, it's really important that consumers have access to that, to share their own data. And it's not just Plaid's, thought. Like there's regulatory frameworks around this too, which have reinforced this. And so now it's like law that consumers should have access to their own data. Not all of our bank partners feel like there should be this unfettered access for consumers to have access to their own data, but the government said like it should. And so with that comes with some specific obligations that we think that as a good steward of helping consumers connect their data to different apps or experiences, that they do it in a way that it's consumer control, it's permission by the consumer. The consumer has a lot of transparency around where their data is being shared and how it's being stored. And Plaid, we don't actually sell or use data for marketing. It's actually part of our the developer policies, effectively like saying, like we can't and we won't share data for marketing purposes. And that's really core because it's really about the consumer. It's not about Plaid getting, exorbitant value over like by being able to store the data. And so the Plaid portal is one of those ways to do it. Like talk about control, transparency for a consumer, where they can actually go to our website, the Plaid portal, and actually see where they've connected their financial data to apps. So you can go on there and say, oh, I can see Bank of America is connected to Venmo, or I've connected Bank of America to Coinbase, and then you actually can depermission that right there on our portal. And that's really core. Again, it's about giving consumers the control around that. Some banks have the same type of functionality on their own mobile app. You can also do it at the FinTech app, but giving consumers the options, again, I think is kind of core to how we think about our role in the ecosystem.
So that perfectly leads on to my next question, which is about Plaid's mission statement. So Plaid's mission statement is to unlock financial freedom for everyone. And more specifically, Plaid is focused on democratizing financial services through technology. Plaid builds beautiful consumer experiences, developer-friendly infrastructure, and intelligent tools that give everyone the ability to create amazing products that solve big problems. So how important is it to make financial services accessible to everyone? And how can this technology change the world for the better?
So I'll give you a real example that we're working on right now. So if anybody has a credit card, by the way, my brother co-signed my credit card when I was in college. I was like the worst thing he did, because what he did was it was like his credit and it wasn't mine. So it actually took me years. Like I was living in San Francisco and I was making good living, and I like couldn't get credit. That's like, it just killed me. But I had good balances in my bank account, but I couldn't get a damn credit card. So we're actually working with fintechs and banks to think about how do those people that haven't had traditional access to credit, and you call them like the credit bureaus, they call them like thin file, no file. Effectively, it means that you haven't had a credit card before, because that's how they're making decisions. Once you get credit, you look good, as long as you pay off your balances. But what about those people that have never had credit before, and they just are credit averse, or they just like to use debit cards versus a credit card? And so there's actually a lot of work that we're doing Plaid, working with, like I mentioned, others in the ecosystem, including regulators in the government, to think about how do we use open finance, open banking to extend credit to those people that don't actually have not traditionally had those access to the credit. And my use case is actually one of the key ones, where it's like somebody actually has a balance in their bank account, regardless of that balance amount. So but they've never had a credit card before. The balance kind of indicates that I'm actually going to pay off, like if I actually use my credit, I'll pay it off because I have the money. And so that's a pretty good credit decision for somebody to lend me a credit card. But traditionally, without kind of an open banking platform where I can actually show that I have a balance in my bank account, I would have been rejected all day long. And I was rejected all day long. And so I think that's one like core element where we're trying to get financial services to kind of like all corners of the ecosystem, regardless of whatever category a person falls into, really trying to help them again gain access to the financial services industry where they traditionally haven't. I think open banking does that, and Plaid is kind of part and parcel of that.
Awesome. So currently, Plaid employs over 1,000 team members. Over 11,000 financial institutions across the US, Canada, UK, and Europe are covered by Plaid's network. There are 6 offices around the world. 5,500 fintechs are built on Plaid, including big names such as Venmo, Chime, Robinhood, Betterment, Truebill, Samsung, and Acorns. So given the company is already so large, what opportunities for growth does Plaid have for both the company and for employees?
So, so I think traditionally, you're right. So we've grown at a ridiculous rate, and we're still growing. You mentioned, I think I mentioned, or you mentioned, over 250 like open recs right now for hiring, and a lot of that's in technology. I think Plaid. I don't think Plaid is a tech product first organization and it's really energizing because it's like when somebody has a good idea, we want to build it right away. We want to test it. We want to get it in market. We want to see if it works, and we want to fail fast. I think that's really important. And so I think for the purposes of like thinking about how Plaid grows, look, it's become more of an influence. I mentioned earlier, when Plaid started, I was a 100-person company, and like any company, you start small, you have a real focused niche, and you really stick to like that lane. But as you grow, your sphere of influence gets bigger, and so we're building more innovative, more integrated products, like products that are more complicated and can act and be can look and feel more like traditional financial services products, like credit decisioning or payments products. We have a lot of payments partnerships out there, when traditionally we were just kind of the connective tissue. Now we're building services on top of that. Additionally, Plaid, like I mentioned, we're working with regulators. We work with industry bodies. There's a industry body called the Financial Data Exchange. It's FDX for short, but it's effectively like a group of organizations in the US who get together and they think about like, what should open banking, open finance look like in years to come. Plaid's on the board. So Plaid's influencing these industry organizations. I mentioned earlier how we're thinking about extending credit to where traditional credit was not available historically. Plaid's also building out our own strategy around how to mentor and help new fintechs. We just started our second cohort of a strategy called FinRise, where we actually mentor CEOs or C-suites of fintechs, so Plaid can help influence organizations on how they think about themselves growing. And so it's really about just kind of breaking down barriers in the ecosystem, which were traditionally standing between banks and fintechs, or fintechs and regulators, and just kind of being at the center of that. I think it's kind of like core and really interesting what we're doing.
Awesome, thank you. Next question. So in April 2021, Plaid raised this large number, $425 million Series D financing to help scale the platform to support the massive growth in fintech and enable the next generation of digital financial services. Looking ahead, Plaid is focused on creating a single integrated platform focused on helping innovators build digital financial products. Doing so requires scaling to meet the increased use of fintech, expanding globally to meet international demand, delivering an expanded set of platform products to our customers. What challenges will Plaid face while trying to create this single integrated platform?
Yeah, and to be honest, totally direct, I joined after that 425, meaning like it's nice to be there, right? So if you ever look for an entity, like get there right before it went up round. It's really fun because, but I joined after, and I mean it's been great. I say it jokingly because but look, that it is a lot of money. It gives an organization a lot of flexibility to think of what they build. So we're doing a couple of things. One is we're thinking about, so I mentioned earlier, Plaid has traditionally been kind of building blocks for fintechs to use to build their own services. And a lot of those challenges are not unique. The things that we're thinking about building in an integrated platform aren't really unique to Plaid. They are really common across all of our clients. And so how do we make sure when a client comes to us and they say, hey, let me use Plaid to allow consumers to share data. Let me also use Plaid to help determine if like that new customer, that new consumer is creditworthy or not. And then let's use Plaid to help fund an account, a wallet at Venmo or something like that. Those are all things that they kind of have to put together. But why as a platform, why shouldn't we have just like a full integrated platform that says, look, you integrate with Plaid once and we will help you, more or less onboard a new consumer, we'll help you fund their account, and we'll help you make credit decisions all kind of in one API, one technology connection. So when traditionally before it was multiple, I think that's just like, that's a low-hanging fruit of just like thinking about your own product set differently. We actually also, to reinforce that, with that much money, traditionally kind of look at acquisitions too. So we've got a company called Cognito, and we may talk about this in a second, but Cognito is effectively like the KYC, which is short for Know Your Customer platform, which effectively allows you to just like validate that Ian is who he says he is by looking at Ian's driver's license through your app, or looking at my passport, and really kind of doing the diligence that Ian's not a bad guy or a fraudster, but he's actually, or a synthetic ID. So we're thinking about those things of like, you build some stuff, you think about your own products a little differently, you bundle them together to make them kind of more platform and more integrated, to use those two exact words. And then also you think about how do you acquire companies that can help accelerate your growth in that strategy. And that's kind of what we've done.
So you've read my mind. I am going to ask about Cognito.
Yeah.
So Plaid's recent acquisition of Cognito supports the efforts towards a credentialless API-based ecosystem. Cognito is an identity verification and compliance platform. It makes it faster, easier, and safer for people to verify their identity when signing up for financial services online. So can you explain why this is or isn't a big deal?
So it is. So if anybody's, I'm sure many, if not everyone on this has actually opened up like a bank account. Sorry to sound like a dinosaur, but like when I would open up a bank account, I'd traditionally go into a branch, and you'd have to sit there and you'd sit down, you bring your, two statements and your 2 statements of some type of utility and my driver's license. That's all like KYC. It's know your customer. It's effectively like the bank verifying again that Ian's not like some synthetic identity created in the ether so I can defraud the bank. Those are all like the reason that they want to see that I was like a physical human. 2 is they want to see that actually documentation that supported it. But the way we do that now in the digital world is you have biometric authentication, which is effectively like you look at your phone, it knows your face and it knows that you're a human, that you're not like a green screen. And that's one way to verify that like I can walk or, I can walk into a branch myself. So that kind of solve that. And then two is like the documentation verification. So it's like take a picture of your driver's license and then they run that against the DMV records out there and they can see that, that's a valid. They take a picture of the back so they know the stripe is also verified. And so like that experience, I mean, it's not a novel experience, but integrating that into how a consumer onboards into a fintech app where they want to do really high value transactions. Let's say they want to like transfer $1,000 or they get transferred. They want to do buy now, pay later where they want to buy a Tesla. I mean, that's like really critical to ensure you like really, really, really know who the person is before you give them a car. Though Tesla, they could always just self-drive it back if you were a fraudster. But the point there is like they're doing all the things to make the experience super slick. And cognito is like one of those.
So moving on to my favorite question of all the ones I've written. It's kind of a long one. So payment initiation services allows users a quick, safe, and convenient way to pay for goods and services directly from their bank account by relying on licensed providers like Plaid to initiate the payment and send secure messages to banks through APIs to issue a payment order. SEPA, instant credit card transfers, may potentially offer the opportunity to help open banking succeed in Europe. This premium platform rail is a scheme that banks connect to in order to facilitate transfers. It allows for payments to be settled into the receiver's bank account at a maximum latency of 10 seconds. This virtually instant movement of funds across banks has great potential to revolutionize payments. So does the United States, with roughly 10,000 depository institutions, 21 million business payers, and an $18 trillion economy, have similar real-time payment scheme? And what would it take for the American financial institutions to adopt open banking?
Yeah, the mouthful, huh? It's so funny. So yes. So, by the way, I'm seeing like people for the first time, like in San Francisco, like first week, people are coming back to the office. It's pretty sweet. So yes, there's a couple of things. So the banks a few years ago, and this is like close to my heart, they built Zelle, which is effectively like a real-time payment capability between consumers to send money from one bank account to another bank account across two different banks. That infrastructure was actually really, really, really difficult for banks to build. In Europe, with PIS and PSD2, it's still difficult over there, but there's just not that much legacy technology sitting over in Europe. There is, but it's not so distributed, meaning there's not 10, 15,000 financial institutions in Europe. So rolling that out in Europe, although it's still rolling out, it's still going to SEPA ends, which is you referenced that it's still going to take some time. And I can get into that too because of my history. But my point in the US, it's much harder because if you think about the one branch credit union that sits like on the corner of your small community, they rely on they really don't own any of the technology. They really rely on all these third-party technology companies to build around something new and innovative. And so Zelle, which is just like a real-time payment between two consumers, was easier for Wells and B of A and Chase to get together because they're huge, they're trillion-dollar banks. And so they can invest hundreds of millions of dollars to make this work. But for it to get down market into the 11,000th credit union, it's going to take a long, long time, and it's going to take a lot of effort by organizations that are not the credit union, but that they rely on. So that's why you have other schemes that are like ACH, which is a payment rail, is ubiquitous, but it's slow. It's like overnight or over the weekend, so it's not instant. So it will just take time for everyone in the US to adopt it. And it just may not be economically feasible, to be honest with you, for some of these smaller, because it just may be so costly. So I think the answer is like, yes, but it will take it. Yes, it exists. There are more that are being built out, both by bank-owned entities plus the government. But now you're not just asking an organization to adopt one real-time payment rail, but now like 4, and like that now the cost is 4 times. So it's like the barrier just gets that much higher for the smaller entities.
So for your best estimate, how long do you think it will take for it to be adopted, or do you think it never will be?
I'm just trying to reference like how long did it actually take like the credit card companies to like roll out, or ATM to become fully ubiquitous. Like it takes decades, and we're a decade into Zelle. Like it started back in 2011. And again, you have these other real-time rails that have popped up since. But Zelle, which has pretty significant momentum, is still only 2,000, is like between 1 and 2,000 financial institutions, credit unions, and banks. So if it's within my lifetime, I'll probably be too curmudgeon to even want to like play around with it. So is that like an ambiguous answer enough? So
It's a pretty good answer there. So in February 2022, so last month, Plaid announced timestamps for transaction data. Timestamps are now available as part of the date time and authorized date time fields in the transactions API response. With timestamps, you're now able to show granular insights on your PFM app, reward customers based on the time of their purchase, and calculate spending velocity. Adding features such as timestamps enables businesses to gather new forms of relevant data that they can use to better understand their businesses and enhance their practices. So how important is data analytics, and how is this field revolutionizing how business is done? And in addition, what extent are these large financial institutions adopting data analytics?
Yeah, I mean, they've been doing it for years, but banks have traditionally been using data analytics specifically around like extending credit to consumers and like avoiding losses. And now I think that's when fintechs came in and they said, well, let's use data analytics to actually create really cool user experiences where we can like use AI or machine learning to actually give consumers recommendations around how to be more financially secure, make better decisions. And so, yes, banks have used it forever, but it's traditionally been around like, again, credit and lending. They're now, you see that they are starting to get into these other more consumer experience type of use cases around, personal financial management, again, presenting investment opportunities when it makes sense for somebody within their own balance sheet. So I think the answer is like a resounding yes, and they'll continue to do so. Some banks are actually really, really good at analytics, especially those like Capital One. Again, they're trying to ensure that they have like the best decision models around card lending. But I'll lean back into the earlier point, which was like how banks want to extend like financial services to those people that they traditionally haven't helped in the past. And so like being able to give consumers in all corners of the ecosystem access to banking is really core to how they think about using data. So there you go. Yeah.
Can you describe what you do at Plaid?
Yeah, it sounds like my dad. I actually don't think of my dad, like he still doesn't know. It took him, it took years for him to like realize what I did. So, all right, so I oversee some folks that actually work with banks. I have a team that sits in the Bay Area, in New York, and Toronto. And our goal, so traditionally, Plaid has been kind of a two-sided network. There's been like banks on one side and fintechs on the other. And the way we traditionally work with banks is like making sure that banks consumers can share their data through Plaid into the fintech. And so we've traditionally managed banks that way, where it's just like they're one side of the bank. So my team manages a lot of the relations. So we're relationship managers. And those are really complex relationships because these banks look at Plaid and they're like, you're not you're helping consumers go away from me versus like do more with me. And so there's this historically before I joined, it's not always been the most collaborative conversation that we've had with banks. I say it nicely because I heard a few of them. Part of me and my team role is to actually think about, oh, why does this have to just be like a give only, and why can't we create value back to banks? So we're working with banks and we're migrating that relationship to, banks actually want to use open banking again for data analytics, for other ways to engage with their consumers. So my team is helping banks and Plaid think through that evolution. And then ultimately, like my thesis when I joined was, Plaid and banks should actually be co-creating products that are better for the ecosystem, not just giving the building blocks of fintechs, but actually creating deeper partnerships with banks. So they can lend to the underserved, they can create better PFM experiences, they can create potentially real-time payments opportunities using open finance. So those are like in my own like thesis, like, okay, what is my own 3 to 5 year strategy? Like if I'm successful in this role, it means that we've taken an adversarial type of relationship, make it more collaborative, and then maybe even like co-development. Be kind of that's a resume builder. I think that's kind of what I'm looking for. No, it's a change. But it's definitely a change in the way Plaid's persona is in the ecosystem, which is ultimately what I'm looking for. Yeah.
So now would be a good time for the audience to start thinking questions and putting in the chat so we can start having more of an open Q&A. I do have a few more questions, but we can go back and forth with audience questions and the ones I have written. Cool.
Sorry.
Yeah,
So I had a question about just in general. I'm not sure if you answered this already, but with Plaid, what was the biggest hurdle that you had with mainstream adoption and coming in as innovator in the fintech space? What was the hardest part of getting Plaid on in people's faces and being able to have that opportunity with them?
Yeah, so I think for Plaid, and again, I wasn't here, so it's full disclosure, but they were building a technology they built a technology that was really rapid change for banks, and so they had a lot of pushback from the traditional financial services like banks and credit unions, mostly just the large banks, and the large credit card issuers are like the ones that like think about this, like, because banks make a lot of money off credit cards. And so the biggest challenges were Plaid and that relationship with banks, because banks would try to do whatever they could to create a narrative that Plaid was unsecure, unsafe for the ecosystem, wasn't really proven out. That Plaid was doing things that were nefarious, like selling data, which they're not. So I think it's just more of like thinking about when they rolled out, they built a lot of traction with the fintechs early because, again, they were super slick, a couple lines of code. They had some of these early adopters like Venmo just really explode. So like they got credence and viability through a lot of the volume that way. But at the same time, it was a complex and adversarial relationship with kind of one side of that network that I mentioned. And so that was like a constant challenge, I would say. And Plaid did an amazing job, just like evolving over the last 5-7 years, where they had, as a disruptor, you have to be disruptive early, and you have to be okay with the uncertainty and concern that you have, because you're creating your entity is creating the change and creating a lot of uncomfortableness for traditional players. And you kind of have to be like, you need a team, and you need like the resolve to say, we're going to sit here and we're going to like stand our ground, even though you're outgunned and you're outnumbered by a lot, because these banks are huge. But then now you become super important to the ecosystem, and then the leverage changes, right? And so we're at a point where Plaid's leverage changed. But it took, I know, again, I wasn't here, but I know for a fact that there were weeks and weekends where they were like, are we a viable company, right? Because the banks could take their legs out. At the same time, the the banks, by taking out Plaid, you also take out the connection that consumers have to their bank accounts. So you're effectively saying to your consumers, like, you don't have access to Venmo anymore. And then who do they call? They call their bank. And so like there's always this like natural tension that like banks want to do best by their consumers, even if it sometimes hurts their own business model. But I would say that was, you know, I wouldn't say, I mean, you can read it and you can see it and you can feel it, those were hard years. But the resolve was, you know, get a strong founder, strong CTO, and a strong team to say that they want to hold that line.
Does anyone else in the audience have a question?
Yeah, so I was sorry, I don't have my camera on, but I'm sick as a dog, so I'll keep it off for now. I was wondering, since you're in the startup world in the Bay Area, do you have any thoughts on kind of in the last couple of years, founders raising like massive rounds, pre-product, kind of before they've even launched or built anything, raising like $50 million in seed rounds or Series A? Like, do you have any thoughts on that, or where do you stand on kind of these crazy funding pre-product rounds?
Yeah, I mean, first of all, it sounds like you have spring break coming up on Friday, so yeah, you better get a couple days before you got to get yourself well against the against.
Yeah, for sure.
So all right, this is like the old banker, like the old boring banker in me. So like I did M&A where it was like traditional like revenue multiples and like, you know, what's your IRR hurdle, and like all the stuff that like are traditional NPV kind of calculations if anybody's over the corporate finance. So yeah, it kind of blows my mind away where I'm like, you have no revenue. You have what's your IP, your intellectual property like store, like what are the assets that you have and how are they valued so much? Like to see these 50, 100, 200 X multiples of revenue, it's crazy. It is crazy, to be honest with you all. But at the same time, like it's kind of like I have a friend in biotech, and he's like, I'm like, you guys make money? He's like, no, we lose it constantly. But there's once in a while, like the winners are just so big that they're worth the investment. And I think, you know, the money has been the flow of money, though, until recently, I think a lot of these valuations, that's why you're seeing a lot of these entities actually not go IPO, has been crazy, because I think they just see that there are just such incredible exits. To be honest with you, like Plaid, you know, Plaid's at what, a $13.4 billion valuation. Just a year earlier it was 5 billion. This year before that was $1 billion. So like, but Plaid's demonstrated, and no, none of this is public, but like we demonstrated the appropriate growth to support those. And so you never know like what the VC's thinking when they're thinking about the 200, 300. But the exits are huge when they are. The last thing I will say is like, and there's a couple of examples, I won't name them, but you know, where, you know, a pretty aggressive CEO knows how to sell, right? Like I think I saw 1,000x multiple on revenue on a Bay Area company, and I talked to some people internally, and they were saying the CEO is just amazing. So I think there's part sell, part reality. And by the way, that's an opinion of Ian, not like, you know, fully formed probably out there, but yeah, they're pretty crazy. They're fun though. Look, I'm sitting in this amazing, by the way, I'm sitting in this like amazing office at Plaid. It is, I mean, it's open, it's yeah, everyone's, you know, got an Apple. It's really fun. And actually, and there's a reason that you like invest in like environments like this. It's because people want to be here and they like want to work late and they want to be together. They want to build really cool, awesome experiences. And that like leads to valuation, right? Like my traditional banker thinks about valuation at the end of the day, but that's part of it, is some of the funding goes just towards motivation for sure of the team.
Thanks.
So one thing a lot of college students are thinking about is, I guess, the work environment and what it would be like to work at a company like Plaid. So would you be able to
Yeah.
talk a little bit more about how it would be for a college student to work at Plaid or recent graduate?
Yeah. I think I was thinking about this one. And so first of all, like Plaid it's growing crazy itself. And what I think with Plaid is, I mentioned earlier, that's like it's a heavy tech, heavy product organization. And so coming in and just like understanding that the company itself is running at like 1,000 miles per hour. But you have to, but even me, I'm 20 plus years into my career. In the first like few months, Plaid does a really nice job of saying, it doesn't matter how long you've been in the industry, like right out of college or not, or like 20 plus years like me, like they want you to come in and understand culture. They want you to understand the technology. They want you to understand the philosophy. They want you to understand like how, like what's the persona of Plaid. And it was really different, to be honest with you. I've gone into new organizations where like, okay, here are like 10 people we want you to talk to, and then tomorrow we're gonna go like, we're just go time. Plaid really actually invests in that process to get people deep into all of those things I mentioned before, which gives you, it's a little like, made me a little anxious because I'm like, I want to get going. And they're like, nope, slow down. And so that investment in people and making sure that they feel like they are, again, deep knowledge base of the tech, the product, the people, the philosophy was really energizing for me. And so somebody coming in out of college, like you're super fired up to start a job. At the same time, like you're on a fire hose. And so Plaid's one of those places where I think they allow you to land softly, but once you do, you got to use that base. Like you got to demonstrate that deep technical knowledge, that deep like philosophical knowledge, understand that you're here for a purpose. Because then, month 3 on, it's like, it's go time, which is fun. So.
Does anyone else have a question before I ask my last quick question?
Yeah, I have one question actually. What's the perspective of blockchain on blockchain or Plaid?
Yeah, with Plaid.
Yeah.
So first of all, thanks for being on video. Nice to see you. So I mean, look, we work with we work with organizations that do so you're saying blockchain, not so much like crypto, because we traditionally, yeah. So right now our traditional sense with is mostly focused as on being what we call the on-ramps into crypto. So taking somebody's consumers like fiat dollars and helping them get into crypto through our technology. So that's like our traditional business model. We do that, like I said, Coinbase, we do it with Kraken, we do it with the others. Around around blockchain. So Plaid is, I think, just like everyone else is thinking about blockchain as a like the core technology, as like how can we leverage blockchain, especially as we get into different types of identity management, different types of payment networks. Like blockchain can be the underlying, and I also think but this is not too dissimilar how banks are thinking about it. They're thinking about using banks in Canada and Europe actually use blockchain for the purposes of identity management, so they can use the technology to ensure that if they've never seen a consumer before, they can use this underlying technology to quickly verify somebody's identity. Same thing with payments. And so like the actual technology is really sick because it allows you to think about those different use cases that aren't so volatile, like just a traditional crypto use case. And Plaid will do the same, banks are doing the same, and you can kind of see it. And it's actually in practice already with identity management up in Canada and Europe. And I know in US, I know a few entities that are building it for banks.
Yeah, my question was actually about more the maybe not next year, but in 10 years, with the blockchain technology, maybe identification confirmation is going to be much more easier,
Right.
or the payments, or the data sharing. So
That's right.
And this is a core function of Plaid, right? So I was wondering if there is any plan to switch to blockchain technologies so that things can work smoothly.
Yeah, I mean, so I think the answer is yes, because of those ones that you just mentioned, like especially around payments. I mean, it's payments and it's identity management. Data exchange, it depends on the data. You know, I think more the confidential, like we say PII, personally identifiable information is like the more confidential. Those are always the ones that I think people don't put PII, that so name, social security number, date of birth, that kind of stuff. A lot are still hesitant to even put that in the cloud, right? Because of certain things that are happening. So I think it's really about using technology in a way that you understand the risks, and then if it makes it better and there's more value accruing back to either you or a consumer, they'll use it. But again, I think Plaid thinks about data exchange kind of like banks think about money, like highly risk, like it's better to be risk averse, because one bad incident and it's it's not good.
Thank you so much.
Yeah.
So for the last question, it's
sorry, could I just ask a quick question? Yeah, so actually, like, I remember, I think it was like a month ago, one of my friends was like trying to link their bank account to like an app, and
that was our
option
competitor.
like Plaid.
No, it was our competitor. No, if they had a problem, if it went really well, it was Plaid. No, I'm just kidding.
No, it did. It went well. It went well.
Yeah.
But basically, like, she didn't really know what Plaid was, and she asked me like, "Oh, like, is this like trustworthy? Is it safe?" Because I feel like outside of the fintech space, outside of like people who are aware of it, I guess not everyone really knows about it yet. So how are you guys like getting users to like trust your service, basically?
Yeah, it's a really good question. It's actually something we've invested in pretty heavily over, especially in the user experience, because we do have competitors that actually don't. So there's a couple of things. One is we want to make sure that a consumer knows that if they're interacting with Plaid, they have like links or access to information where they understand what Plaid does, how we operate, what our policies are, all that kind of stuff. So you see these links all over the place. And that's core. Again, consumer transparency to consumers is core. But at the same time, if you introduce like this random brand without reinforcing it with other information, it's tough for a consumer that's, like you said, hasn't operated in that space. What I would say is Plaid has gone with a strategy of, when you link through, we call it the link. It's actually our link flow. It's like multiple panels that you go through to connect to your bank. And so we show Plaid early, we show your banks, and then when you actually do the linkage, you actually show like this Venn diagram of the two logos overlapping. So a consumer can kind of see if that actually, if that gives them value. They look at it and they say, okay, they're working with my bank, right? They're working in concert with my financial institutions, so they're not just scraping, they're not just taking my data. That's kind of been our core, and it's really important for us because the regulators are like, you have to be prevalent and you have to show what your role is in this exchange of data. And so we've been more overt about that as of late. And so your friend may have been just seeing us being more overt, and we're also, building the Plaid portal, which we talked about earlier, is kind of part of that strategy. Talking about Plaid being more visible out there is also part of our strategy. What I would say is we have also competitors that have not leaned so heavily into like making sure that their brand is like front and center, and they've gotten in trouble, to be honest with you, like by the regulators, because they're not, because it kind of feels like they're trying to obfuscate their own brand, so they're not, like, the consumer's confused. But then then they see like, who is this other competitor, and there's consumer confusion. So anyway, so Elvin, I think that's the long-winded way to say, like, we try to do a bunch of different things, and there's no like one core strategy because we're not the main brand, right? We're not the bank and we're not the fintech. We're this thing in the middle, but it's super important that if they see us at Venmo and then they see us at Robinhood and they see Plaid both times, they have like higher confidence that we're doing the right thing for them.
Thank you so much.
Yeah.
So for our last question, it's very relevant to, I would assume, all the people here on the Zoom call. What advice would you give to a college student looking to enter fintech?
So it kind of goes along with a couple of things I said earlier. So trying to be consistent here. So one is like, if you're looking to build innovative, like if you're trying to actually build an experience or build a fintech yourself, just take a total blank sheet approach. Don't think about like the barriers that you have. Just build. Again, this is not like novel, so I'm not trying to be like this amazing like Steve Jobs type of orator here, but like just think about like the blank sheet approach, like where you're actually solving a real problem. That's product management, like development 101. The second thing, and I mentioned this, is what I learned later in my career was having a really, especially in fintech, is having a really good balance of technical expertise or acumen, like being able to get in, understanding code, maybe not write it to the level that like, you know, somebody at Plaid does, but being able to like understand it, being able to understand how the flows happen in the user experience behind the scenes, not just the pretty user experience, but like what happens behind the technology. And then overlaying that with kind of like practical business knowledge, like, hey, are we like breaking consumer confidence? Are we sharing data the way we should be sharing? Are we doing things in a way that are like increasing or decreasing risk in the ecosystem? But if you can, me personally, that's what's really benefited me is like, when we build a product, they bring my team in. We're a relationship team, so it doesn't sound like we're technology, but we actually I make sure my team gets into the very details of how the product technology works, such that when we do talk to our bank partners, we have that level of acumen. And then also internally, we can help identify pitfalls to our tech and product teams that they may not be thinking about because they're just thinking about the best user experience. So that's like what's I think personally has helped me, and not being scared to actually like really learn, even though I'm again like a mid-40s, so like really learning something new. And the last thing from a fintech standpoint is like, you know, plan to fail quickly. If you're being a disruptor, recognize that you're going to have some haters, and then and just, you know, be confident that what you're doing is backed by like what's good for either the consumer or, you know, the ecosystem. I think that those philosophical morals will actually kind of help you stand your ground. I know it has for Plaid.
Well, thank you so much. This has been an amazing discussion. I've learned so much about Plaid, open banking. It's been very informative. So thank you so much for taking the time to be here with us today.
No, thank you all. I appreciate it. Thanks for reaching out, Isaac and the team. Have a good one. Have a good spring break. Everyone be safe, but have a good time. Things are opening up a little bit better more. So it's good. All right. See y'all.